Good morning and welcome to our Ashworth Wealth Weekly Market Update. My name is Scott Thomas. Glad to be with you this morning. It's been very interesting as we get to the end of 2023 to look back on the markets this year and also look forward to next year and what we anticipate coming up next year. And I wanted to just share a couple of things that I thought were interesting about where we're at fourth quarter, but also looking ahead to first quarter and what we kind of expect coming up over the next month or two. A couple of things, and I've talked about this in previous weeks, but and I'm going to share a graph here in just a second. But it's interesting that company earnings continue to come in, and most of the companies, or at least a good part of them, are having higher than expected earnings, better than expected earnings, which is continuing to drive up stock prices and continuing to prop up the markets. Made a couple of notes here. Retail sales, this is not necessarily how much companies are making, but retail sales in general are actually higher than what was expected. One thing that has really helped all this is energy prices are down. Um, I couldn't believe I filled up my truck the other day and I was actually below $3, which hasn't happened in a long time. So energy prices are down. There are well, let me give you a couple other things that are up. Furniture prices, sporting goods, electronics, those are all up higher than expected. There are a couple things that are down, which doesn't surprise me too much. Building materials is one of those. That's a big part of our economy, and that's really not that surprising with interest rates staying as high as they are. So that is one thing that has continued to be down. A couple other things, and this is the graph I wanted to share with you today. Because the numbers have come out and there's been many numbers that were better than expected, when we started at the beginning of the month, our GDP estimates for growth in the fourth quarter started the month at 1.2%. And because of the better economic news than expected, those have steadily been increased. The expectations have steadily increased. Now we're sitting at 2.6%, which is quite strong compared to where we thought we were going to be here just 3 or 4 weeks ago. So what does that mean? Company earnings continue to remain strong. We continue to watch earnings, and those will continue to roll in over the next little bit. So what does that mean for next year? Obviously, this year we're just about done. We've got just about another week in the trading year. The markets have done quite well considering where we thought things were going to be for this year. What does it look like going forward? Well, the next Federal Open Market Committee meeting, which is where the Fed meets to decide on interest rates, they will meet on January 30th and 31st. So all eyes are really now looking ahead to what the Fed is going to do and what they say. Like we saw here back in the end of November, the Fed didn't do anything, but it seems like the whole market and everybody's just waiting with bated breath to see what they're going to say. So basically in November, they said that they weren't going to do anything and the markets went up. What we expect going forward, when they meet in January, most experts are predicting that they will hold steady, that the Fed will hold steady and rates will remain at the Fed rate at 5.25 to 5.5. However, depending on how inflation continues to look, we anticipate that at some point during this next year, if things continue to go the way they are, that we are going to see some Fed rate cuts. And we're hoping that's the case. We've heard one, we've heard as many as three, and really that's going to be on a month by month or a quarter by quarter basis. But it'll be very interesting to see what happens on January 30th and 31st. And the markets have reacted either very positively or very negatively, depending on what the Fed says. So that's kind of the next indicator and the next thing that we're really looking at. So again, as we close out 2023, we're grateful for all of you. Without you, we wouldn't have a company, and this all wouldn't be possible. We're grateful for you, grateful for a great year. We look forward to a 2024. We anticipate more fluctuations. We anticipate more uneasiness in the market, but we are going to continue to preach being diversified, holding to the principles that have guided us over the last 20 or 25 years. And we will continue to keep you informed of where we think things are going and what's going on in the markets. Again, we appreciate all of you. Have a happy holidays, Merry Christmas, and we will talk to you all in the new year. Thank you. Bye.